righty.
All right. Welcome to this week's Multifamily Weekly Roundtable. This week's guest is Patrick Duffy with Tactical Asset Management. And we're going to talk about why asset management is critical to the performance of your property and its ability to produce the returns investors expect. Patrick is the founder and CEO of Tactical Asset Management, and it's a leading provider of asset management and technology services for multifamily operators nationwide. Patrick is also an active multifamily operator himself with a portfolio encompassing over 1,700 units and growing. Welcome to the show, Patrick.
Thanks, Rodney, Dan, Anthony. Thanks so much for having me here.
You bet.
Yeah, thanks for coming on.
So if we could, Patrick, go ahead and just kind of tell us about yourself, your company, maybe how you got started, and that'll fire off the conversation.
Sure. So I started my journey in multifamily real estate on the principal side of the transaction in 2017. Prior to that, I was in commercial real estate lending and various capital markets groups. And so I had always lent on multifamily assets and dealt with residential and commercial real estate investors from the lending side, but I always wanted to be on the principal side of the transaction. And in 2017, I had the opportunity to do that and partnered with some folks, closed just over 500 units in 2017, and then took most of 2018 to frankly figure out how to operate. There was really no asset management playbook, and it was just a position that I was handed to run with by virtue of just earning some of my sweat equity in those early deals. Since I didn't really participate very heavily on the raise, I just primarily focused on sourcing them and closing them. And during 2018, I developed a framework and some processes and procedures for asset management. And in 2019, formally launched Tactical in order to offer asset management services as a third party to other multifamily syndicators, since I saw that was something that folks seemed to be kind of struggling with, and not everyone was really cut out to be a property manager and asset manager when they came into the multifamily space. So we offered ourselves up as a service for that. And in 2019, it was a busy year. We grew the Tactical portfolio by just over another 1,200 units. So right now in the Tactical portfolio, we have about 1,800 units across 8 transactions. And now we've also expanded our third-party asset management business to 20 assets and about 3,500 units in 5 different states in the Southeast. So it's me and one employee who sits out of Denver, and together we tackle the portfolio, and going to be hiring some more people on here soon. And that's where we're at the current day.
So earlier you were kind of explaining where asset management sets in the stack of the property to the owner relationship. Could you mention that, how that works, and what the duties of the asset manager are in relationship to the owner and the property manager?
Yeah, absolutely. So in the simplest terms, the asset manager is typically the owner or an employee of an owner, or even a contractor of an owner in my case, who is primarily responsible for communicating the owner's wishes and needs to the property manager and making sure that the business plan is being met and implemented in the way that the ownership wants. And so I sit between the property manager and the ownership group, whoever they may be, and I'm kind of the quarterback on the field, if you will. The owners are the offensive and defensive coordinators. I'm the quarterback, and our property manager are the wide receivers and running backs. So they actually kind of run the plays, and me and the owner kind of come up with the plays to hand them. And a lot of what I do is centered around making sure that we're meeting or beating our pro formas, adapting to changes on the ground. So for example, if we found that one unit renovation type isn't quite getting us the proceeds or the premium that we wanted or intended initially, we reallocate those funds into a place that's more accretive to the property. And so it's really dynamic. It changes all the time, but in simple terms, we are in charge of really implementing and making sure the business plan is executed.
Awesome.
You have such it's unique. I haven't really heard of like a third party asset management group like this before, kind of nestled in between the ownership and the property management, but it makes a lot of sense. I'm curious, how do you guys structure the compensation? Are you kind of looped into the equity side of that, or is it a flat fee similar to what a property management group would recoup?
It's fee based.
Okay.
And so we opted not to go sharing in the equity route. We just chose to make it fee based. So it was very simple. Didn't make people feel like they were getting married as opposed to maybe just kind of dating us. And so if it wasn't working out, people could make a switch as quickly as they wanted. And so we charge a 1.5% asset management fee, which is assessed against the gross monthly revenue. That's typically market and what we see for syndications on the asset management fee side, typically between 100 and 200 basis points. So we tended to stick right in the middle at 150. And we also offer some bespoke or a la carte services, if you will. So we will handle refinance, the refinance lifecycle from app to closing. So basically the owner just needs to come to the closing table and sign, and we'll do the exact same thing for sale management as well. Those are completely optional services that our clients can choose to use us for in the asset management of their assets or not. And it's something that we have pretty good experience in, and so we're doing it for our clients now. But all of our asset management fee work is all fee based.
What about investor communications? Because in our group, I kind of lump investor communications like monthly and quarterly updates and all that kind of stuff under asset management.
Yeah.
Do you do that as well, or is that kind of up to the owner if they want to keep that and maybe hand it off to you?
Sure. So what we do is we provide a monthly deliverable, which is financials and a simple narrative with regard to major updates of the property. And then we let the owners control the messaging to their investors if they want to message in a certain way. But our deliverable is a distilled down report to the KPIs that we really care about, and we found that the majority of our investors care about, and just a brief narrative of major goings-ons, and the owner can take that and communicate it in the way they best see fit.
Mm-hmm. Okay, so as far as the investors are concerned, they're still talking to the the key principals, and not necessarily you guys if they have questions about something going on the property, right?
That's right. And we do that just to allow our clients and our owners to maintain that communication. So theoretically, the end investor never even has to talk to us or know we exist, just that we're doing a good job. Yeah. And sometimes it has elevated to the point where we have gotten on the phone with the owner and some investors so they can ask some more pointed questions, especially if we've been handed an asset that's undergoing a major turnaround effort that we're in charge of. Mm-hmm. They want to kind of get a sense of how we view the property and the steps forward. So we'll have those calls. But generally, our clients and owners are talking with their LPs directly.
Mm-hmm. Okay, very cool.
Yeah.
So I'm curious, so part of our audience that we're trying to educate here are some passive investors who maybe are already in a deal or looking at their first deal. So sure. Maybe we can just break down real quick. What are those KPIs that a passive investor should be expecting or looking for from their asset manager, whether it's a third party like yourself or from their key principals?
Sure. So I think at a very top level, and I'm going to pull one up just so I have it as a reference document, but clearly you want to see what your occupancy trends are month over month. And if you can do it a little bit more granularly than that, then that's great. But typically our Rlps really care about month over month changes in occupancy and where we sit on a pre-lease basis. So that helps tell a story as well. Certainly where we're coming in with regard to revenue and expenses. And also because so many of our projects are larger and heavier value adds, they want to know how we are doing in regards to our progress on the capital improvements. So, how much of our budget is remaining, what percentages have been spent, things of that nature. And then what we go into is we go into a budget versus actual document for our investors. So we break down year-to-date budget versus actual and show where the variances are based on certain line items. We had been providing variance notes. We found that it was a little bit repetitive in some cases, and frankly, we were either meeting our expenses or we weren't. And so rather than provide variance notes, which we drill into the variances every month with our PMs and our regionals, we just decided to kind of just leave it a very simple document and graphic that shows where our budget versus actuals are really coming in on a line by line item basis. The next component or KPI that we really care about, because I mentioned so many of our projects focus on unit renovations, and that being kind of a key lever of the value that we're seeking to create, is we actually have a unit renovation premium comparison document or module to our report. So it shows exactly what rents were pre-renovation, what they're post-renovation, by unit type, and what is the average renovation premium that we're achieving by unit type. So that's powerful because it lets our LPs know not only are we actually doing the work, but we're actually seeing results. And here are the quantifiable premium results that we're seeing. And then really last but not least is a cash on cash and distributions actual versus budget comparison document. So it not only shows a annual forecast of where our distributions are scheduled to be, but then just below it, it has a year by year historical look at where we fell in regards to our projections. So with those kind of core elements, we feel like we touch on most of what LPs really care about. And there are so many other KPIs from just the management side of the business, which I'm sure you guys look at as well. But we found that mix of the summary that we do is tending to work for a lot of the folks that we work with on these projects.
I'm curious what you think. You mentioned earlier, I'm not sure if it was before or after we started recording here, but you mentioned that a lot of people that get into the asset management element of the business, usually by default, because when you're starting out and you're small, it's usually kind of a 1 or 2 man show. You mentioned a lot of people aren't really equipped to do it, and that's part of why you're in business. I'm curious what specific elements you notice that other people are struggling with that you guys excel at.
Sure, and I'm pretty candid about this. I don't think we do a lot of special stuff. We're just really detail oriented and good at record keeping. And if you're
that's important.
If you're detail oriented and good at record keeping, there's a lot of little levers of value and decision making we can control with that data and that information that someone that hasn't kept those records simply cannot be empowered to make those decisions. So where a certain personality type might lend itself to running around with hair on fire and closing deals and winning investors, that person might not be a natural fit for the record keeping and kind of forensic kind of boring stuff, frankly, that has to go on the property management side, because it's not the glorious kind of sexy thing that maybe people think it is. It's a lot of kind of hand holding and hammering out plans and managing those plans and just consistent. But a lot of people just aren't naturally suited towards that, so we just offer them a suitable alternative.
Yeah, no, I've seen that a lot in pretty much every business across the board. I've seen people who are really good at their craft or their technical skill, but they just don't know how to run a business. And this could be like a dentist or a chiropractor or something like that. Like they're really good at helping people. They love that, but they just don't know how to keep the books. And I've seen a lot of businesses fall apart, not because they weren't doing a good job at their craft, but because they just didn't know how to manage the business as far as like bookkeeping, keeping records and making a budget and things like that. So
right,
it's huge. That's a skill that I think a lot of people are lacking because it's not the most exciting work. Really.
Right. And something that we're finding now, and is something I'm totally happy to accommodate with asset management clients that we have, is we have clients that are probably naturally suited to that type of work. They just don't know what they're doing yet, and they want us to take the lead early so that they can almost kind of learn and observe. And then at a point when they feel comfortable to take back over, we can do that. We're still early into some of those engagements where that might happen, so it hasn't happened yet, but that's something that we're happy to do too.
That's great. That's pretty much what I used my first property management company for before I took it in-house. Was I thought I was going to do third party the whole time, but a couple months in, I realized it wasn't a good fit. So I was like, okay, I just need to learn everything about what they're doing because I need to be doing this. It's not working with them. So that's a great approach. I like that.
Thanks. I am curious, what kind of property management software do you guys use for your business now that you do it yourself?
Yeah, we just switched to AppFolio.
Okay.
So
you guys
how about you guys? What's that?
You guys are happy with that so far?
Yeah, so far. We just switched within the last, I'd say 3 or 4 months, I think. But yeah, before that, we were using Buildium, which I wasn't too crazy about. And then before that, when I just had, a couple properties, was I forgot what it was even called. Some cheap software like Tenant Cloud or something like that, which was just awful. Buildium was okay, but Appfolio just seems to be a lot more robust. So, are you guys using like Yardi or something like that?
I work with a couple property management firms that use Resman. There's one property management firm that does use Yardi, and I really haven't been given a lot of access to their back end yet, so I can't make any comments there. Resman I do like quite a bit, but the property manager that we have the most units with, they actually use a system called AMSI for their leasing, and then they primarily use QuickBooks for all of their just kind of base accounting and order tracking. So they're CPAs, that's what they like to use. And, we haven't seen anything suffer from it, but I am kind of trying to help them see the light of like a Resman-like product, because I've really enjoyed that product since I started using it.
I should backtrack and say that for accounting purposes, I'm still using QuickBooks. Appfolio is where we've got all of our leases and all our tenant data and tenant ledgers and things like that. But then the actual P&L and balance sheet, that's all maintained in QuickBooks. And honestly, it's just because that's what my bookkeeper is comfortable with. And so I could go either way, but I haven't really played around with the Appfolio financial tools too much. But yeah, it all kind of works, I guess. I don't think QuickBooks is honestly all that scalable, but it's where we're at now. So it's working.
Nice.
So Patrick, I'm curious, for like a new operator, let's say, wanting to get into the business and like take asset management underneath themselves, you kind of mentioned that you guys have really good systems and processes that enable you to be effective. What are those kind of like macro level categories or buckets that an asset manager needs to be cognizant of and proficient at managing to be able to, run a good business?
Certainly. And would I be able to, I don't know if you guys have a means of distributing content or any files or anything like that, but I'd be happy to provide kind of a Excel workbook that mimics the online environment that we use for our asset management, that I'd be happy to provide to any listeners so they can kind of use it and build off it themselves. But
fantastic.
Yeah, we can provide that in the link in the show notes in the description so that viewers that are watching this in the future can have access to that, because that'd be awesome.
Okay, perfect. Yeah. So that I tend to, if you think about kind of the modules, at least that are critical to what we do on a daily basis, that workbook will have it, but I'll kind of go over the ones that I think about the most. So we perform a weekly data capture with our property managers. I know you guys, if you're managing yourselves, you have access to daily data, but the weekly data, it's a weekly report that we receive from our PMs across the portfolio, typically focus on number of units occupied, number of units that are vacant but pre-leased, number of units that are giving notice to leave, and then kind of current collection information. And so I always want to know how many units we have vacant, what our collections look like, or the trends month over month, and frankly, how many we have that are market ready as well. Because it's really important that we make sure we have product ready and able to rent. Another bucket that I use daily and weekly based on calls is really just a simple project log. So at every property, you have N number of open projects, and it's just a good place to put your weekly notes that you have on calls with property managers in relation to each project. And a simple way that I kind of start out the project log on every property is, if you come into a property with a capital improvement plan and budget, well, maybe that covers 10 or 15 or 20 different areas of your properties. You just started off with 20 new projects at your property. So that's kind of a nice way to just kind of kickstart any new acquisition, is just kind of mirror over what your CapEx or capital improvement budget looks like. And then that's a good segue into one that we use quite often, because so many of our projects are bridge loan based and have renovation draws and reserves associated with them, is a CapEx tracker. So we developed this and kind of took some notes from other capital improvement trackers that our lenders actually were having us fill out as a means of obtaining a draw from them. But that's what we use to just have our finger on the pulse with regard to how much money we still have at our lender available to draw down on certain budget line items, how much we have already drawn down, and it comes into play all the time. in what we do. And there's another one that I'll mention that it's coming to use a lot more frequently now that we're getting of a size and we have some kind of purchasing power or bidding power, but service contracts. Knowing the service contracts you have in place at a property, what each is charging per unit, and being able to kind of have some visibility across your portfolio is a pretty powerful thing. Because what we found in the same city were regionals using different vendors for different trades at their properties. And the question was never really asked, well, why don't we do a portfolio bid for pricing here? And so we were able to achieve some pretty powerful discounts on that as well. But those are, some sample buckets. And when folks download the document, they'll be able to see kind of how much more can be done as well.
And what software do you use for your project log?
So right now, it's within a Google Sheets environment that we've just kind of built out and maintained. But stay on the lookout for some asset management software coming out by the end of the year that I'm excited to share with some people. That'll be fun.
Yeah, I guess that's a natural next question. Are you guys looking to leverage into a software-based service, or because you kind of mentioned like possibly training newer asset managers coming in, and like you guys run that for a bit, so there's like a cool little education wing there, but then you also have your fingers on the pulse of the asset management software that would be the most effective. So is that something that you guys are looking at rolling out yourselves?
There is, yeah. So by the end of the year, I would expect to see our kind of version 1 of our SaaS product go live. And it'll really be targeted towards more of the middle market multifamily operator that needs some organization and robust asset management tools to enhance their business. And frankly, a how-to. And one of the things that I'm excited about is with this software will come basically a tutorial on how to get started and kind of help people kind of wade into the waters of asset managing their own deals. And so right now, a lot of the asset management softwares that I've seen and talked with operators in the space that maybe some use tend to be a little bit more robust in nature beyond maybe what a normal operator might want. And frankly, are really largely dashboards. And you can get a dashboard or make a dashboard on Tableau. I don't find that all to be that special, but what we're endeavoring to build is something that will be as critical to your asset management or multifamily operations business as email is to your business. Mm-hmm. And so that will be what's replicated in the online environment. So when someone sits down to work for the day on their portfolio, that's one of the first windows they pull up.
Yeah, I think that's super cool. There's not, to my knowledge, at least, a lot of information out there for new aspiring operators to kind of show the nuts and bolts of asset management. Like there's a lot of information out there about how to go find deals, how to close the deals. But then once you have it and it's time to go and operate, like there's not a ton there. So might I suggest that this is SASET management?
I like it. If you don't, yeah, I'm taking that.
Yeah, there you go.
But one good thing that, and I don't know if it's available out there, but if you have this, you have like a portal for the LPs to be able to check on status of whether it's disbursements or anything like that. And I know that some of that's covered in, like if was it IMS that that is used out there, but
expensive though.
Yeah. It is expensive, and if
it's great, but
well, it does have its drawbacks. We've run into some issues there, but if you could have kind of that investor report that you normally would provide your investors once a month, and the investor has the ability to see into it, not necessarily, all the nuts and bolts, but, just open the hood, kind of see the, what's turning in there. I wonder if that would offer a level of serviceability and comfort to investors that they don't have at their current level.
Yeah, that and visibility to the property management partners as well. I've come into situations early on when asset managing when the property manager, frankly, just wasn't aware of all of the factors of our plan. And that I realized that was a critical communication breakdown on our part, that we weren't effectively communicating exactly what our plans were for every aspect of the property. And so to your point, Rodney, and it's great, having some shared visibility between the ownership group and the property management group so that they kind of both know where they are on projects, I think would be a very powerful tool that's frankly still not even being utilized enough, because sometimes folks are just still operating in their silos, and even I'm guilty of it to a degree, and need to be better about sharing information with our property management partners. But yeah, I mean, that type of information level access and transparency, I think, is just a no lose situation. But I will say that for the operators that maybe aren't too hot about seeing their data, or investors seeing the underlying data, it's probably not the right solution. But for us, where we didn't want to spend hours every month writing 20 different short stories on assets that we're asset managing, we just wanted the data to tell the story and the performance metrics to tell the story. We think it'll be a good solution for folks. So.
Yeah, and it's probably a feature that can be turned on and off, I would imagine.
Exactly. Yeah. View permissions. Yeah. Mm-hmm.
So, sorry, Anthony. One more question. We were talking about fees before, and it seems to me that hiring somebody who's efficient and does this one particular thing very well would tend to offset any fees and allow the operator to concentrate on other things that maybe are more profitable for their current role, if you will. Do you see that as basically a selling point of asset management, or having somebody that's dedicated to asset management?
Yeah, absolutely. I think what we do certainly allows our clients to only focus on the things that they do best: raising money, finding deals. And that's what we empower them to do now that we have taken it over for them. But, even beyond that, I'd say the primary motivation to folks I talk to is just making sure your project doesn't fail. And that's the reality. It very well could fail, especially given the assets that some people buy, if they're not being managed right. But absolutely, Rodney, I find that some of the folks that we have taken over for asset management, they've already used the newfound freedom to go out and find more deals, which is great. That's what we want them to do, because then they'll become growing clients of ours. So it definitely complements what they want to do.
Go ahead, Anthony.
You're in a really unique position. I would say in business, the thing that I've always found the most difficult is anything that relates to communicating something to another person. And you're in an interesting position because you're in that middle position between the property management and the ownership group. So you're trying to translate from the ownership group their wishes and desires, and trying to understand that clearly enough, which is one difficult conversation to have. And then on the other side, then is actually implementing that with the property management. So what are your strategies and tips? You already kind of talked about, you went through some learning processes there about, needed to give the property management a little bit more visibility to have the complete picture of what they were working with. But how have you overcome that? Because you kind of have two hurdles there on both sides now.
Yeah, no, it's a great question. It's something that's come up recently because I was just talking with a property manager of mine and just talking about what differentiates certain clients within their business and how they communicate with their various clients, and that information transfer takes place, to your point. And I've always found it productive to be very pleasant and polite and positive with my property management partners. Mm-hmm. It's just kind of my nature, and it's the way I've been. I've also fired property managers like that, if it's clearly going in a direction or it can't be saved. So I take more of a stick and a carrot approach. I'll slip some of our regionals or on-site people some cash when I'm on site if they're doing a phenomenal job, and that makes an impression and gets them to work harder. And so I find that, and I'm generally pleasant, but they know, and all of my property management partners know, that if things are not going right, just by virtue of how we keep records and notes very consistently, they're going to get called on for it, and some of them will get fired for that. And so that is typically how I'm managing the relationship at a high level. But speaking more specifically to how you translate the needs of the owner to the realities of the property manager, I'm always kind of leading with to my property management partners, hey, this is what we want to do. Do you think that's a good idea? Can we do it better? Can we achieve a more optimal result and make them owners and part of the solution? as opposed to just kind of order takers. And so I've found that to be a very helpful collaborative tone to take with all of my interactions, in that they buy into the solution, they own the solution, and it just creates a more team atmosphere. And then unfortunately, there's been some instances where I myself or owners that I asset manage for have been, very insistent about one particular initiative, and either it fails or it does really well, and we will adapt or continue. And so there's always that too. Sometimes kind of have to say to your property manager, maybe, I hear what you're saying, but I really still think we should do this way and just see how it works. And then, either you're vindicated or not, and just have to be adaptable and change course. But I hope the comments on the tone and the teamwork atmosphere I was kind of alluding to weren't too off the trail of the answer there. But that is critical to managing both of those parties.
Yeah, no, it's totally on point. I love the aspect of getting buy-in from the property management by actually eliciting their expert opinion, because this is what they do all day. They are experts theoretically in that market, in that asset type, and that asset particulars. So, there's a lot of knowledge that you can extract if you're open to actually letting them share and being receptive to that. So I think that's good. And then, yeah, I think to the stick and the carrot approach, it's very difficult knowing like, how do you incentivize? Like, it's once you get into business and you're working with employees, you realize the incentive issue of like agency principle, and how do you get perfect alignment between boots on the ground and chairs up in the tower. Like, that's actually very, very difficult. So it's cool to hear your process.
One of the things that I noticed, and Anthony, you'll probably agree with me, is that earlier before we went live, Dan completely understood everything that Patrick does, because he was talking about quarterbacks and defensive ends and all of that stuff.
No, Dan missed that entirely.
Dan
doesn't do sports.
I blacked out for a little bit. Yeah,
no, I love analogies. I think everybody probably at this table really loves analogies. So, Patrick, you did share a really good analogy before we went on, and maybe for people who like are still trying to conceptualize, like, what is the asset manager? I don't understand how that's different than property manager. Like, you had a great analogy that kind of broke down to the sports team.
Sure. So, what I would qualify us as asset managers is really the quarterback, and our property management partners are the people running and making the plays on the field. And
this is football, Dan.
This is football, yeah.
Oh.
And it's ironic because I was a kicker in football, so I technically wasn't even supposed to be on the team. They just had me there to walk out and kick a couple
get those easy points.
Yeah, so believe me, I'm really over my skis here describing the various elements of the football game. But up in the booth are typically the defensive and offensive coordinators, and the folks that see it from a high level, like the ownership group or myself as an owner, that are calling some of the plays and working with the asset manager to make that happen on the field. Mm-hmm. And so that's kind of where we sit, right between the property management partner and the ownership group as the asset manager.
Yeah, I like that. I like that example a lot. We talked, Dan and I, about the jumbo jet analogy, which is the property manager is much more like the pilot of the plane, like making sure that it actually gets from point A to point B, and they're also the flight attendants servicing the passengers who have bought into the syndication model. And then I think of the asset manager a lot like ground control. So they're navigating and making sure that the planes aren't crashing into each other, that they're actually flying from the destination that they intended to the destination that they wanted. And then the ownership group is maybe like the airport owner. So kind of like just keep building further and further out there. So
and to that point, asset management is kind of like steering the jumbo jet. It has a long turning radius, and so if you want a change to occur, you got to start it early so it can have time to take effect. Yeah, mm-hmm. I've heard a similar analogy, and I think it's great. And that is a critical component, actually. I'm glad you brought that up. Is just a lot of the record keeping that we do on a daily basis just allows us to make decisions quickly so that we can see their impact as quickly as possible. Because some of these things, as you guys know, it takes out time to work out bad tenants from a property or burn off loss to lease. These things take time. So you kind of have to plan for it well in advance so that you can meet those benchmarks when they occur. So,
yeah, I think that's probably a mistake that a lot of newer guys make when they get into this business, especially if they're focusing on the value add element, is like you mentioned, the time element. If you come into a property, you're not just going to revamp the tenant base and couple of months. Like, you've got to plan on a painfully slow process, especially now with this. I don't know what it's like in your areas, but up here we've got basically a period of time where we can't evict people, regardless of what they're doing. I mean, unless they're like
dangerous,
doing something ridiculous, like they're not getting evicted until at least July. So you've got to like build that into the business plan and say, okay, there's going to be X number of these people, and it's going to take X number of months where they're not going to pay, and we got to just eat that, build it into the business plan. I was going to ask what you think, based on what you've seen with yourself and the clients you work with, at what point in like an operator's business journey, from when they're starting square one by them, their very first deal, like at what point in this journey, as far as like maybe portfolio size or something like that, does it make sense to bring in a third party so that the operator isn't wearing too many hats and maybe focusing on an area that they're not well versed in?
It can start as soon as the very first deal, and it can hit it when they're about to, pull their hair out because they, don't know what they're doing and it's getting overwhelming. I'd recommend that people do it well before that, because it, things can get pretty bad. But, I think people just need to be honest with themselves and what they're really good at, and view this as an opportunity to really offload that which they don't want to do, to people that have been doing it now for a number of years. And so to answer the question, it really can start from day one, and there's people that we work with and know that have just made a decision that when they get their first deal, we will just simply be their asset manager. And so it's just a decision that they've made. But for anyone thinking about it, or maybe pulling their hair out, it's not too late. Just give us a call and we'll talk through it, because I've seen, how disparaging that can be when things are left to go a little bit too long. It's just a deeper hole to dig out of, but it can be overcome.
Yeah, definitely. Once you get to that overloaded stress point, it's so easy just to shut down mentally, put on the blinders, and just kind of like keep doing what you're doing, but it's clearly not working. So it's just making the situation worse. So I'm curious, we can't make it through a single conversation these days without mentioning COVID. And from an asset management standpoint, it's affected a lot. So I'm curious, what are the because it does take a while to turn that ship around and to kind of forecast. So, and this came out of nowhere for a lot of people. So what were you guys doing, and what were you finding effective to kind of navigate these tumultuous times?
Well, it's funny. My personal portfolio is all in Memphis, Tennessee. And we have 8 deals in Memphis, Tennessee, about 1,800 units. And over the years, Memphis is a very delicate market in that you have to be careful where you buy. And you really have to find folks that, from a management perspective, are good at dealing with your tenants. Because so many tenant issues and collection issues are hashed out in the leasing office or belly to belly at the door. And so luckily, our on-site personnel and our management company was extremely good at collections and adept with that type of tenant relations that we found to be so critical during COVID in the years leading up to COVID. So frankly, when COVID hit, we checked in with our property manager and got the scoop from them on, what their plan was, but knowing how prepared they were, we essentially let them do their job and watched as the numbers came in on a weekly basis for collections. Initially in April, we got collections data a little bit more frequently, especially in that first half of the month, because we were all kind of, worried. Yeah. And really, really interested to see what the trend was. And so since then, I can say that our portfolio in April and May, across the board, was probably down between 5 and 10% on average. There were some properties that did far better than pre-COVID, which is ironic. They just happened to have a lot more people. We rolled out much more aggressively online payments during COVID just to reduce contact. And we had a lot of people really getting active and prepaying via online, which was great to see. And we had some properties that frankly just had a larger tenant population of folks that unfortunately were really directly affected by COVID. And so we saw some declines in collections at those properties. But portfolio wide, it was not a really big shock to the system. And luckily, because I think owing to how our property management company had worked and developed relationships with those tenants, it wasn't something like we had to do for the first time. So I was really, really pleased to see that trend. And, you know, I talk with people all the time and still don't feel like we're out of it, you know, because we still have quite a few unemployed people and stimulus money will run out. And so it'll be really interesting to see what happens when it does. But I'm encouraged by the fact that at least in Memphis and some of the other MSAs in which we are asset managing, that at least those local economies are opening back up. So we hope the effect will be a lot less poignant, but just making sure that you are in front of your tenants and making sure those folks that potentially need help receive it, it has been vital during this whole season.
That kind of segues into a question that I was going to ask pretty well. I'm assuming that you, with the operators that you work with, you're probably jumping in to the relationship with them prior to acquisition and during underwriting. I'm guessing, is that right?
Yes and no. Some folks have found out about us or decided to engage with us post closing, and some people do engage with us prior to closing, and that's very helpful to do.
Okay. I'm curious what's changed in your underwriting over the past 3 months. You know, if you're looking at a deal, like if something just came across your desk today, what kind of assumptions, what kind of changes to your assumptions and performance do you think have changed based on everything that's going on, if anything?
Yeah, so it's funny because in late March, we were best in final on a deal that I would have really loved to go at. And I think we were right there on price, had equity ready to go. And it was a great story to tell. And then COVID happened. And investors basically just looked at us and we're like, pens down. Like, we don't know what's going to happen and we can't proceed. And unfortunately, you know, I felt as a fiduciary to go to the broker and say that same thing. And I had the same feeling that, look, I can't even underwrite this because I don't know what the impact is going to be. So we just got to bow out for now. Since time has passed, I actually haven't underwritten any new acquisitions. I know some of my colleagues have. I just haven't personally. But if I were to, we always underwrite our deals kind of net zero growth. So we're never projecting any rental growth above our expense growth. So it's always net zero. We're always kind of looking at what we can force through comped out rents and post renovation. But, you know, so from that aspect, I don't know if I would punish myself by going even further negative on rent growth. I have heard people going, you know, negative rent growth, which, you know, to each their own, and that's all good. But, you know, I think the most basic thing that anyone could do when underwriting a new opportunity now is just to revise your debt assumptions. There's just no doubt about it, especially in the bridge space where we play pretty much every acquisition. Some folks are just simply not lending anymore that were 4 months ago. And so it's just a vastly different landscape. Coupons have gone up several hundred basis points, depending on the MSA. Leverage has gone down. And a lot of lenders out there right now are kind of throwing their own little, you know, accents on the loan program to control the risk that they anticipate coming by virtue of COVID. It's such a moving target. But I think, you know, people will do what they do from a rent growth standpoint, but where you really need to pay attention to are your debt assumptions, because it's just a different world.
Yeah, that's very interesting. And just to kind of clarify for any listeners or watchers that aren't super well versed in this stuff, I think what you mentioned there about your rent growth assumptions was essentially that you're not forecasting, or that you haven't and don't plan on forecasting any organic rent growth, but you guys have a forced appreciation element because you guys are doing value add deals, right? So there is going to be rent growth, but it's because you dropped 10 grand into a unit, not because the market appreciated, right?
That's exactly right. Yeah, okay. It's just been the way I've always underwrote, is just zero organic rent growth, and what can we force and prove we can force.
So what are you using as your baseline for expenses? I'm curious. Is that just like 2-3%? Because that's kind of your 0 point, right?
Yeah, it's historically been like 3% for me for expenses has been my historical trend line, and usually just 3% rent growth. So it just zeroes out.
I like that.
Yeah, and that's a good way of being conservative.
Yeah.
Well, my question got answered, but I do have one other. Is there a particular area that you see over all the properties that that you take over that tend to be more of a deficient area that owners fall into that try and do their own asset management? Is there
Cash
one
management.
particular area?
Cash management.
Yeah.
Liquidity.
Okay.
What people do far too often, and I was guilty of this myself when starting out, is they just simply spend more than what they have and they don't maintain as liquid enough position as they need to keep their business plan going. And what I see time and time again is folks, they essentially run out of cash to actually have working capital going. And yet they may have hundreds of $1,000s in reserves with their lender. And it's a crime. It's a shame to see that, because those dollars are just being waiting to be drawn, but typically have to be drawn on a reimbursement basis. So you have to have spent the money. And if you have zero working capital, your project just stalls. And so that's where, capital calls come into effect. Thankfully, never had to do one. Or, unsecured personal loans from other GPs, things of that nature, which we've had to do in some cases just to recapitalize assets I've been managing when taking over. But working capital and just maintaining adequate liquidity is probably the number one most consistent thing I see when taking over a property.
And do you have any I'm sorry.
Oh, sorry. Is that going into the deal, or is that through the deal, or both?
Sometimes both. Sometimes sponsors may close on a deal undercapitalized, and they're kind of scratching for pennies from the very beginning, and that can be a challenging situation. And then some other projects have been maybe a year into it that they just found themselves in this cash trap because their AP is mounted up. They have barely enough money to pay their AP and trying to play that rebalancing game. So it can occur in both angles, but in both situations, it's pretty.
And you've always, you typically hear that, 1 month, 1 month's rent is what you should keep in reserve. But do you think that is a little too, that's not conservative, but just a little too thin on the reserves, or do you think it's about right?
Well, I think it's going to be user preference or property owner preference, but I view it as long as my accruals are being adequately serviced there, and I know that whatever I need to accrue for, that is being covered what I have in the bank, then, it's really situation specific of how much buffer I leave on top of that before I distribute the rest to investors, based on whatever pref we have to meet or things of that nature. But frankly, I don't see anything wrong with the 1 month buffer approach at all. I just want to make sure that all of my accruals are met, which is something that's, boring and kind of painful to do, but really important, because you don't want to, find yourself at the end of a year or at a point in the year with a huge bill that you just didn't monthly accrue for. So
True.
Taxes.
Yeah.
Right. Yeah, I think that's something that, it goes back to one of the first things you mentioned is just poor record keeping and, being too busy with the day-to-day operations and not keeping the books clean, right? I'm sure it just catches a lot of people off guard early on because they're not keeping those records and they don't notice until, oh, wait, that balance is looking a little bit low. And I've got, all these bills, and that's right. I got to pay taxes now too. Forgot about that.
Right.
That's not a fun day.
Yeah.
So
No, it's certainly not. And the stress that may come with shifting around cash in order to do so, it's just not fun. Just kind of
not a good look.
I'm sure, what you experience maybe from the property management software side is being able to maybe just set automatic accruals or just kind of memorize rules. And that type of automation and remembering is so key, because you do it once and then don't really have to think about it.
I'd be willing to bet that most. I was going to say, I'd be willing to bet that most operators out there don't even know what an accrual is. I think,
Agreed.
Just the basic, kind of accounting stuff, which, it's boring. No one likes it, but it really is the language of business. Like, I just don't think most people out there doing deals these days have a basic accounting understanding. And I think that's really hurting people. So that's why I pay. And for what would you say the fee was, like 3% for you guys?
1.5%.
1.5. Okay.
Yeah.
I was like,
whoa,
that's
a
you just like doubled
it. Could be 3. I wouldn't have been surprised. But I think it's a no-brainer for so many operators. I happen to really enjoy all that stuff that you just described, the accounting and bookkeeping and all that stuff. But I'm really confident that I'm the minority, and most people hate that stuff. So.
Mm-hmm.
I would agree. Yeah, we're definitely kind of among the minority of folks that enjoy getting into the nitty gritty, but it's important. I mean, it's hugely important.
Mm-hmm.
Definitely.
Yeah. Well, we're running to the top of the hour here. What do we have any last minute things that we want to cover? Anything that we haven't covered, Patrick, that maybe you want to bring to light?
Did we cover like contact info and like
we do need to do that too?
Yeah, absolutely. So anyone can go to my website anytime. It's tactical-asset.com. You can shoot me an email through there, shoot me one directly. It's P as in Patrick, Duffy, Duffy at tactical-asset.com. Happy to get in contact and
find you on LinkedIn too, Patrick.
Yeah, any social media?
Yeah, Patrick Duffy on LinkedIn and Facebook as well.
Very cool.
Yeah. So Dan, Anthony, I am curious, what are you guys seeing in the markets right now, or kind of on the horizon in your local area? What are your guys' plans upcoming?
Yeah, we were just having this conversation the other day, because we, obviously like deal flow like really dried up over the last 2 months. And then this deal we were looking at before all this stuff started happening just kind of resurfaced in last week. And we're sitting here thinking like, okay, what, we got to take another look at this now, because the world's completely different than it was in February. So I guess to answer your question, like over like March, April, and May, as far as like rent collections and just performance of assets, I was actually pleasantly surprised with how well things went. I can only think of like 2 tenants who actually came to us and said that they were negatively impacted because they were furloughed and they were in the hotel industry, and they were back to work within like 4 weeks, I think, from when they. Yeah, so there was basically 1 month where things were tight, but they still paid. And then I think like April, we saw like a 5% decrease from the month prior, but then May was normal. So rent collections were great. Marketing vacancies was definitely slower. And it's just starting to pick up now getting into June, but basically April, May, and maybe in like the last couple of weeks of March, things really just like shut down and turned off. And, we weren't getting nearly as many showings as we were before. So, but I'd love your confirmation on what we were thinking about as far as like rent growth, because it sounds like we're pretty much on the same page. Just nothing organic, because it's going to take a while to make up all these jobs. So,
yeah.
I mean,
and it's going to take a while for us to fully realize, I think, the damage of what's occurring right now. So I think just banking on zero rent growth is the smart conservative move right now. And then if we're proven wrong, then bummer, it's just frosting on top of the cake.
Yeah, we're like a plan for the worst kind of guys.
Yeah.
No, I mean, hey, that's all good. Same thing could be said with regard to terminal cap rates. I mean, that's kind of anyone's best guess, frankly, when it comes to terminal cap rates. And especially now, do we just add a couple more bips per year and escalate that way and hopefully get proven wrong? Maybe that's the answer. But yeah, it's interesting.
Yeah, we've always had ours going up. No matter what, but I've seen a lot of guys. I'm always so curious to like peek under the hood of other people's underwriting, which sometimes is a little bit tough to do without seeming like you're being invasive or
Creepy.
something. But it's surprising how many people just have it flat or dropping, and like that's their plan. Like that's what they really think is going to happen, and like we all hope that's going to happen, but. Like
the plan
even check
is dangerous. Yeah.
Some of these guys don't even check to see what happens if they don't do sensitivities. So it's crazy. So, another reason why having a pro in the room is good, because they can get your ego out of the equation and give you a reality check. If someone who's not really like in the project is saying like, dude, like you're getting way too emotional with this, like that's not going to happen.
Right. Yeah. And really you touch on a good point. When I'm on site with an owner, sometimes the same thing occurs with regard to sometimes you have champagne tastes and a Bud Light kind of budget, and kind of bridging that reality gap as well. It's like, I love that you would aesthetically like to see that at the property, but this is what we have budgeted for. And by the way, look around this neighborhood. There's no reason we need, a water feature at this property or something like that. And so, but yeah, it is. it's really interesting to see how other people work, but also, great, because you just meet other people and hopefully help them do better for their LPs.
Mm-hmm.
So that's all good. What kind of deals do you guys focus on? Do you have a certain community size that you like to go after, or what do you like?
Currently, what we're communicating to brokers is like 50 to 100, maybe a little bit more than 100. I guess what is maybe 50 to 150 is our range.
150, yeah.
Yeah,
but those are kind of few and far between up in this area. The property is over 150, so it's slim pickings.
Yeah.
Given that you've been self-managing, and I found it kind of indicative that every sub 100 unit property that we bought from someone that was self-managing. Do you find that a sub 100 unit product can only really be efficiently run if it is self-managed?
It's a good question. You'd think that, since that's the direction we chose. No, I don't think so.
There's some factors that would come into play there, like the proficiency of the property management group that you have running it, and if that's an asset type that they're really familiar with in that particular region. So you maybe have all your properties within a particular little neighborhood, then maybe you can kind of treat it as like a dispersed bigger property. And if that property management group is really good at that, then maybe it can work. But you definitely do get a lot of efficiencies of scale. And as soon as you go too far below the 100, it seems like maybe it's not so worth bringing in the outside property management. You're in this weird area. So you need to be, I think, decisive and commit one way or the other and say, this is the path we're going to choose and build out the systems and processes to do it ourselves, or we're going to trust in the property management and try and educate and train them so that they can execute how we would want them to.
Yeah, I guess I've been asked a similar question quite a bit in the past. People usually ask like why I chose to like take that in the house. And I think I usually try to tell people that it's just like, it really depends on the personality of the owner. Like I mentioned earlier, like, I'm a control freak, definitely. I don't know if Anthony really is, but I definitely am. So that's why I went that direction. I was like, I need to just, be as in things as I can, like not necessarily boots on the ground. I don't want to be the guy that's actually going and collecting the rents, but I do want to be like integrally involved in the process. And that's why doing it in-house works for us. And again, I think I'm kind of the minority there. Most people fall into the camp where they would rather just outsource it, which seems to work quite well for them. But I think it comes back to the personality of the individual.
And I think that's kind of the whole point of this conversation, is really understanding yourself and being like self-aware. Like, are you the type of person that could manage the property? Is that something that you would find enjoyable, or would it just be heavy work that you kind of dread? And the same with the asset management. Like, that's a whole other thing. If you're not a detail-oriented person who's really good with records, who wants to stay on top of communicating with the property management and the investors, then maybe that's something that you do outsource. And so you guys are filling an interesting little niche there. I like it.
Thanks.
So if the property is, let's say the property is sub 100, not necessarily, it's still in the 90s. Okay. I know that we have property managers that don't like to do less than 150. They say that the efficiency goes down. But if the income is there and the numbers work out, and you can still pay the investors and the property appreciates and everything operates just as it normally does using your normal underwriting, where does the inefficiency come from?
The inefficiency of having a third party?
Yes.
For myself, I felt it came from conflict of interest because they were managing properties that were also owned by other individuals. And if they're showing a tenant of, one of my properties, and they're also managing property that's owned by somebody else down the street, like, their incentive is equally split between me and this other guy. Right. They could easily say, hey, you know what? I happen to have another unit down here. It's owned by somebody else, but it's exactly what this person wants. So having that kind of dynamic was tough for me, because I knew that the only way that my team was going to be 100% incentivized to maximize my assets was if they weren't managing other people's assets. So that was a big part of it too.
Yeah. And specifically up here in our market, there's a couple of property management groups that would even operate, I think, effectively within that sub 100 space. And of those groups, they also are run by a principal who also has a large portfolio within that area, so like when it comes a lot of conflict when it comes down to, do they show your property or do they show their own property? And they took on the third management property aspect of it because their own portfolio got to a certain scale that it started to make sense. But you got to be aware of that. Like, what's the incentive structure there? Does the at the end of the road, are they going to be pushing your property, or are they going to be pushing their own property? Probably their own until it's full. So
yeah, and I can totally understand that view. Like in our case, in most of our properties, we have on-site personnel. So you have a leasing agent, maintenance people, and the property management company takes care of those employees. I know that you can spend $150,000 on a 90 unit, and you can spend $150,000 on 175 units. And I guess just that difference between, the per unit cost is going to be obviously a lot greater at the 90 unit. So I guess to me, that's the only inefficiency that I see there.
Well, and that was just going to be something that I was going to ask you, Dan and Anthony, is my struggle with the sub 100 unit product has always been staffing it correctly. And especially in the midst of COVID, I'm wondering, at your property, did you put any mechanisms in place to allow for prospects self-showing? Do you do any of that just as a general business operation? I mean, how do you guys staff and maintain the head count and payroll at your properties to make sure they're staffed appropriately but not overstaffed?
Yeah, well, our portfolio right now is small enough that we don't have to staff each individual property. And they're also right now very nicely located within about 5 to 7 miles of each other, essentially the same neighborhood. So all of our staff are remote. They don't live on, well, actually I do have one on-call maintenance guy who does live at one of the properties, but if you're at one property, you're within 7 minutes of all other properties, most of which are within 2 minutes of each other. So that provides a nice little efficiency there. So I think that right there is something that a lot of people that self-manage or have their management in-house don't have, which provides a struggle, because if there's people running across town, it's definitely different up here in Minnesota than it is in Southern California. 40 minutes just to get across town in your area is probably the norm. Up here, you can get around pretty quickly. But I mean, if we were running from, opposite ends of town and they were like 45 minutes apart, that would be nowhere near as efficient. So, I think we can still make it work as we grow. And my plan is that, as we grow and scale up and eventually get out of the St. Paul area, we're pretty much there right now, but starting to get into a little bit more Minneapolis, we'll just have staff, regionally basically. And then all, the properties we get going forward are going to be larger. So then we'll have the on-site staff as well. But
very nice. You guys utilize any virtual assistants in your business?
Yes,
we do.
Yeah, not so much lately, just because we actually have a lot more time to sit at our computer for like the last 2 months. but yeah, no, I've been doing. I think Anthony's been hitting Fiverr quite a bit. I've been using some virtual assistants out in the Philippines just for chopping up videos. What else? Infographics.
Infographics, book cover designs, podcast editing, things like that. So we, in the last couple of months, have put a big effort into building out our thought leadership platform. And so bringing in virtual assistants to kind of help on that front has been really key.
Yeah, especially the Philippines, man. The cost per hour and their work ethic is like $7 an hour usually. So
yeah. I have one gal that works for me, and she's in the Philippines, and she handles a lot of the weekly data intake from our property management partners and putting it in our system, and just a lot of the more repetitive data maintenance tasks that we have on a monthly basis or weekly basis. And it's just been so helpful to us, because that would just be something that I would dread of, okay, even though it's just mindless, it just takes time. So it's just, and now just being able to offload that has just been so helpful.
Yeah, for a couple of bucks an hour, it's a no-brainer, really.
Yeah.
So
has anybody ever hired a VA to do initial underwriting?
I would never
do that. Yeah. You would never outsource that. Yeah.
Well, I mean,
I
if
do
you're
know a
looking
guy
for-
who does it as a third part, kind of like Patrick is
Yeah.
third party asset manager. God, what is his name? I'm blanking.
A
This is
guy
being
reached out to
recorded.
me the other day that does the same thing. He's like, I'll do your
Ike.
underwriting for you. And I was like,
Ike?
that's cool, but no, I'm good.
I think it was
Yeah.
Ike.
Well, if you get
Anyways.
somebody that basically fills in all the blanks, moves the data from the OM to a spreadsheet, then
convert a
you come
PDF
back
to a
in and
spreadsheet,
you do all of the rest of the underwriting.
Yeah, that's probably not so
Well,
bad.
I do I do know a guy who just does underwriting, and he kind of works like Patrick does, where he'll just work as like a flat fee to an asset manager or to a principal, and then he also sells his spreadsheet models online and stuff too. So he's taking that angle. But I think that's another thing where there's a lot of people out there where that is their weak point, and it would probably behoove them to outsource that to someone who's a pro. Because I've seen some pretty crazy underwriting. And
Yeah.
also it's nice to have a third party who's not emotionally invested in the deal let you know that here's what's going to happen. Because it's really easy to start fluffing up your numbers if you want a deal.
Yeah. That's a great point. Finding, almost a primary motivation for the third party underwriting is finding someone that's technically capable, but doesn't care about your deal. Really, being paid for his time. So what more honest, feedback could you get? So that's pretty
and
good.
I have thought about, as much as I would never outsource underwriting, I have thought about utilizing them just for that. Be like, hey, check this out and let me know if I'm losing my head here. Does this look reasonable? So, because it's tough, man. You start underwriting deals, you're working on them for like 2 months sometimes as things come together, and you just keep fidgeting. You're like, well, what if? And then before you know it, you're like, okay, that's getting a little bit too lofty. So
Mission creep.
All right, guys.
Yes.
Well, we surpassed the top of the hour, but this has been a really fantastic conversation. But Patrick, really appreciate your time tonight, and thanks for coming on. Should we hit that live button?
Yeah. So we'll just go ahead and tell everybody that we'll be back next week, and look for our topic that we'll be covering next week. Thanks for joining us.